All right, we are in for another treat from Tim Grittani. A few days ago, he tweeted this. He was in Iceland for a few days, so he couldn't do his March recap, but now he has. So I just wanted to give him a little bit of an intro because he just finished yet another fantastic monthly overview. And for those of you who don't know, Tim Grittani is my top student. He's developed his own strategies and patterns. Shorting morning spikes is known as the Tim Grittani pattern. You can find out more if you go to timgrittani.com right there. But more important than just the money, more important than his teachings, I think it's a great example just showing you how to even look at trading. Let me explain. So a lot of you guys, too many people, way too many people, just go in every single day looking for whatever stock is hot. Let me buy it. Let me sell it. Okay, maybe it'll work. Maybe it won't. And that's it. There are way too many chat rooms out there and Twitter and traders who are not transparent. They don't show all their trades. And I think that's a bad thing. I've heard every excuse in the books. Tim Grittani, me, Michael Good, Mark Crook, a lot of these kind of new millionaires have become wealthy and financially free, and we're able to go to places like Iceland or Turks and Caicos whenever we want by being very methodical and being transparent, showing every single trade, and also looking at specific patterns. I know it's not fun, I know it's not sexy, but Tim Grittani, one of the best things that he does every single month, every single week, every single day is he looks at different patterns, whether they're morning spikes, whether they're an earnings winner or a new promoter or a new pump, and he sees how is this pattern performing in the market right now. Trading is not one constant thing. This is why most traders lose. This is why teaching trading is very difficult. The fact that I have any millionaire students, let alone multiple ones, is kind of amazing in just a few years. And it's due to being methodical, keeping spreadsheets, keeping track of everything. This is why I love Profitly. You can see all of his trades. Oh, wait, these are my trades. Sorry. Too many links in my head. TG trades. You can see all these different trades, and it adds up to this beautiful track record. Tim Grittani, 1,500 into 2.76 million now. And, I think he made roughly 15,000 last month. He's trading smaller this year. I'm trading smaller this year. It's okay to trade smaller. A lot of people think that you have to go and go all in all the time. Successful trading is all about taking your foot off the pedal sometimes. If you go on a losing streak, you can trade with smaller positions. You can paper trade. You don't have to be, 100% full on all the time. And what I really love about, Tim's video, and I'll get done with my intro in a second, but even though he made 15,000 last month, he really talks about his mistakes and his psychology and, being wrong. A lot of people don't realize this, that top traders can be wrong about stocks. I come out with my watch list every night. I try and say, okay, I'm looking for this, I'm looking for this. And, a few days ago, I was just totally wrong on every single play. My watch list was dead wrong. I tried trading a little bit, and I had to take like 2 or 3 quick losses. That's okay. It doesn't mean that you're an idiot. It doesn't mean that you're incompetent. It doesn't mean that your career is over. You can be wrong every now and then. And, Tim Grittani was wrong for a day or two. And he'll talk about that with some of his big losses. I've been wrong every now and then. Perfection is not required. Self-reflection and improvement is. And that is what you have to think. I mean, it's very psychological. Trading is not the stock market versus you, like most people believe. It's you versus you. The opportunities are there every single day. So I highly encourage you to watch the Tim Grittani DVD if you haven't already. If you go to timsykesale.com, I don't know if you realize this, but if you go to timsykesale.com, you can save a bunch of money because it's my upcoming birthday on all these various DVDs and newsletters, okay? And here's Tim Grittani's DVD, Trading Tickers. $1,000, you save 45%, but it probably could be your best investment. You know, How to Make Millions is my 35-hour DVD. You have to be methodical. You have to study. You have to really learn from those of us who have been successful, because we can reflect all we want, but if you've never made a lot of money, you don't really know what you're doing. There's a lot of, quote, wannabe teachers out there these days after such a long bull market. But have they made millions? Do they show all of their trades publicly? Do they actually have other millionaire students and successful students? And the answer for the vast majority of this, kind of snake oil industry is no. So I'm so proud of Tim Grittani. Without further ado, here is his monthly review. Congrats on another great month. Even though he made a few mistakes, he's reflecting, he's getting better, and he's sharing it with the community. So I can't thank him enough.
Hey everyone, first off, apologies for releasing this March recap a little bit late. I was on vacation for the beginning of April. I was off in Iceland, which was just an incredible trip. But, obviously that kind of made it tough for me to record any kind of videos. Anyway, there's a lot to talk about in regards to March. Profitable month, but incredibly sloppy month. Definitely regressed a bit from where I was at in February. Made a lot more mistakes, and there's a lot to talk about, so I may even wind up having to split this video into 2 parts. We'll see what the length comes out to, but let's just dive into it. So March, I did wind up making almost $15,000. Final tally came in at $14,797. And that's a disappointment given how the month started, and given the fact that it was a nice long month too. I really thought I could do a lot more than that this month. There was a ton of opportunity. I really just got in my own way though. My sloppiness prevented this from being a good month. Part of the sloppiness, I think, came from it being an increased risk month. It became a little bit harder for me to cut losses. At the same time, though, I was trying to get away from using the hard stops. I wanted to be able to do it on my own. I talked about that a little bit in the February video, and I failed at that goal. I put it in my own hands again, and I just failed time and time again, and kind of got stubborn and wasn't putting in hard stops, even though I saw that I wasn't doing a good job of getting myself out of the plays that weren't working. Let's start just by talking about the first couple of weeks here, because the first 2 weeks have a couple kind of ugly days. You'll see Thursday the 3rd, I lost 5,400. And Monday the 7th, I lost 11,800. The losses on the 3rd were my own fault. Those were sloppy trades. I'll tell you about those later. The day I really want to talk about is Monday the 7th, because that was by far my worst day of the year up until this point. I lost $11,800. And you might be looking at that and you might be thinking, oh my gosh, what did he do wrong? He must have really gotten stubborn or really fought a stock. And the reality of that day is that I was just wrong on everything. It was pretty sad, actually. I think I made 12 trades that day and I lost 11 out of the 12. It was just one of those days. I was trying to trade the oil stocks, and at that time, the oil stocks, there were some just absolutely incredible runners. The whole sector was just getting crazy overextended. A lot of these crappy little companies that just went on unfathomable runs. And on the 7th, I was trying to sort of snipe the ones that looked weak on the day. A lot of these, they'd been up 2-3 days in a row, up a couple 100% at least. So I wanted to go after the ones that were gapping down, the ones that looked kind of weak compared to the rest of the sector. So it really was just, I guess, overextended gap down plays. And unfortunately, because the rest of the sector was holding up, these select ones I went after just weren't cracking and breaking down the way I thought they would. I believe the majority of these trades were pretty decent entries, and I'd be up for a short amount of time where the stock would be pulling, it would be going in my favor. But then they all came back. They would go green, or they would break past the risk level I wanted to play off of. Now, the one thing I am proud of is that on this day, I cut every single one at my risk. And that was huge because there were a couple that went on huge runs. I can't remember the ticker now, but one of them, I was shorting in the $4 area, took it off around $4.10, and later in the day it was at $7. So it's huge that I didn't get stubborn on any of these that day. And I really was proud of myself for that. It just was that a bunch of my ideas lost. And a couple of them I probably tried a couple more times than I should have on, where I would lose on the initial play and then come back to it later when I thought, hey, maybe it's setting a lower high. So a couple of them I probably shouldn't have revisited as many times as I did. And I did probably have a couple FOMO trades in there. And that reminds me, I get asked a lot, what does FOMO mean? FOMO stands for fear of missing out. So fear of missing out definitely led to a couple of the losers on Monday the 7th. But, all in all, at least I didn't take any giant loser due to stubbornness. It just was a lot of small losers that added up. And then Tuesday the 8th, my $21,000 profit day, that is just the entire sector collapsing. I think I was short 6 or 7 different stocks. That day they all did work. I probably could have been more patient with a few of them, but none of them were really all that much size that I played. I never did exceed my $2,000 risk. A lot of them were really more like $1,000 risk. I never got full size. But it's just that they were so overextended and the entire sector came down and I was ready for it. So because I didn't put myself in that stubborn situation on the 7th like I normally would, because I didn't exhaust myself fighting these, I was ready for the 8th. I was ready to come back and attack again, and it paid off. So my worst day of the year was followed by my best day of the year by far, and that was made possible by lack of stubbornness. So I was kind of flying high after that day. And unfortunately, I did kind of start to protect myself a little bit. I got really conservative the afternoon of the 8th, and then the 9th and the 10th, I was really scared. I just wanted to kind of hug my gains and protect myself. And I missed some opportunities on those days as a result, just getting a little bit too skittish and thinking a little more about my profit loss than about the setups, which was a common theme for me this month. So even though the first couple weeks were a little bit inconsistent, they both wound up being good weeks. I opened up Monday the 14th with a $5,000 day. So halfway through the month, I had made just as much money as I made in February. And I was really pumped by that. I was really excited because I was thinking, wow, I've still got half the month to go. This could be a really good month for me. I started thinking a lot about profit loss. I started kind of setting goals for myself about how, I want it to be a $40,000 a month or a $50,000 a month. And that's just such a dangerous place to be as a trader when you start thinking more about, the money than about the setups and about really whether the opportunities are good or not. And that really is about where the sloppiness started, because I started pushing. I started trying to make things happen, to will myself into that great month. So let's just take a second here to take a look at the mistakes that I did make and how many I had this month, because it really got sad. For the month of March, I had to put 8 entries into my loss journal. Compare that to 2 from back in February. Most of those were stubborn losers where I didn't cut the loss, but there were a couple where I played too large. I guess there was an overlap, one where I played too large and I didn't cut the loss. And yeah, actually we'll talk about that one for sure. That was my biggest loss of the month. So super discouraging to take a step backwards like this, but like I mentioned earlier, it's my own fault. I said at the end of my February recap and going into March, hey, I want to try stopping out on my own again. I don't want to use the hard stop losses. And if I see that I'm struggling with that, well, then I'll go back to using the hard stops. And by the middle of the month, I had already had a few mistakes and I knew that I was struggling with it, but I didn't listen to my own advice. I didn't follow my own rules, and I didn't start using the hard stops again. And then things just kind of snowballed on me and got way out of control. I won't go through all of these losers, but I'm going to go through some of the notable ones. We talked about March 3rd and how March 3rd was not such a great day, and that was due to stubborn losers. On the 3rd, I think I was a little overtired. I was frustrated because my internet wasn't working. I went to Starbucks and had to trade from there. I let some little stuff get to me mentally that I really shouldn't have. And the morning started off frustrating because I didn't really think there were any great setups that day. I remember that, but I wanted to trade. I wanted to make something happen. And the first one I took was Groupon, which was a stock that I thought was a bit overextended. It was gapping down because there had been some bad news the prior night. So I was thinking, okay, maybe this is the day it snaps and really has a panic. So I shorted on the gap down pretty much right near the low of the day, unfortunately. And I was risking it off of red-green. If the stock went green, I was going to cut the loss. And this is the first one where I got stubborn because it broke green and I didn't cut. I decided to hold on. I kept thinking, oh no, this is going to fake. This is going to roll over. And instead had to stop out later at 485, which was the multi-day breakout level, the highest it had spiked up to that point. So right off the bat, I was stubborn and I kind of had a bad taste in my mouth from that. And then RJet kind of came out of nowhere where it had this big gap down a few days prior. The highest it had gotten since its gap down on big volume was 120. And it was ramping back up towards 120. So I wanted to do a short into resistance. And I had a nice little entry at the 111, 112 area on the initial spike. And it had the hard crack and slam back down towards 1 real fast. And because I was on a laptop and, not quite entirely prepared, I didn't have my hotkeys set up, I missed some of my covers there down near 1. I wanted to downsize. I didn't get the downsize. That frustrated me. So later when it ripped back up and broke past my 120 risk level, I wasn't willing to take off. Just again, for all the wrong reasons. I was thinking, oh no, this has just been a gain and I didn't get any coverage. So I was angry. And I was also a little distressed because I knew I was being stubborn on Groupon. So I didn't want to take a stubborn loser on Groupon and then stop out of RJet for my $2,000 risk. I didn't want that bad day early in the month. So again, thinking way too much about profit loss and not enough about, the setups. And so RJet and Groupon, what those both have in common is I went on rides. Groupon, at least I did stop out at the breakout level, but RJet, I rode this all the way up to 160s and then covered up into the pull finally in the 140s. I guess I could have done a little bit better of a job on covering into the pull, but at least I protected myself. But point being is on both of those, I stopped out far later than my plan called for, far later than I had planned on. And that's why that day was ugly. That's why that was a minus 5,000 plus day. After those two, though, I was pretty good about not being stubborn until middle of the month. On the 15th, CPXX, that one, again, a decision I made just entirely based off of profit loss reasons. I took a short into the afternoon ramp up because I was thinking that high day was going to stuff. I was thinking we were going to see an afternoon stuff move, a slam back into the close down to the mid 7s. And I was wrong. Sometimes you're going to be wrong, and there's nothing wrong with that. I don't for a second regret taking the trade, but I regret not stopping out at 840. I think it would have been a $700 loss if I had followed my plan and stopped out. And it still would have been a green day, still would have been, I think, over $1,000 green on the day if I had just taken it off like I planned. But I got stubborn and I said, oh no, I don't want to dent my day. And because I didn't want to dent my day, I had to cover it up before the close instead, up near $9. I added a lot onto my loss and I wound up with a red day instead of a green day. And that was very poor discipline, and I was ticked about that. So the next morning, I went into the day with revenge on my mind on CPXX. It had gapped down, and I said, okay, well, now I'm going to short the gap down, risk it off of the previous day's high, which had been 910 into the afternoon push, and it blew right through in a couple of minutes. And again, didn't have a stop loss in, didn't stop myself out, had a couple of pullbacks where I could have been out for small gains or break even, and I just kept holding it because I wanted revenge. I wanted a gain to make up for that loss I had taken the previous day into close. And instead, I wound up stopping out later in the day, up in the mid 9s, I think. I can't remember exactly where I took this one off, but I know that it was for a much worse loss than it should have been. If I had stopped out at my risk, it would have been about a $2,000 loss. I think I lost $6,000 on this one instead. So just really terrible discipline. And that's really where the frustration started to really sink in for the rest of the month because, we talked about how after that Monday, I had been at 21,000 in gains. I'd been more gains in February, and that was very much on my mind. And now I was knocking myself back, and I didn't like that. I didn't like the fact that I was, making it potentially much tougher for me to have my best month of the year. And I didn't like that I was making sloppy mistake after sloppy mistake. So all of that frustration added up. And because my mentality was more on profit loss than it was on solid trading, unfortunately, that makes it really, really hard to want to cut future losses, especially when you're thinking, oh man, I've got to salvage this month. I need to do really good things the next couple weeks so that I can make 30,000 or 40,000. Again, just back to those monetary goals that really have no place in trading. Add to that fact that those first couple of weeks of trading, where I had my worst day of the year, then best day of year, then worst day of year, then best day of year, those really took a mental toll on me. I was just worn down, and I knew I needed a break. And this all just kind of boiled over on the 22nd, and that day, it wound up leading to some really ugly losses, and I'm honestly lucky it wasn't worse than it was. It started the morning of the 22nd, where Ultimate Stock Alerts pumped PTX. It was just a D-list promotion, spiked up over $1, and then kind of stalled out. And so I decided to get short on the D-list promotion. I wanted to fade it back down towards 90 cents or even lower. So I think I was short from about a 102 average. And PTX, instead, it dipped under 1, held up, grounded back, and then broke past high day, which was my stop. And I got stubborn on PTX. I said, you know what, screw it. I'm going to just hold this. And that was really a dumb situation to put myself in because I knew that I was going to go for a ride on this. I just kind of didn't respect the promoter. I didn't respect the price action. I just said, you know what, like, fine, I'm just going to hold. I'm not taking this off for a loss. And even if it squeezes me up, like, so be it. I will just hold through that and wait for it to come back down to cover. And it was risky, and I knew it was risky. And again, that just me being in the wrong place mentally, I decided to go for the ride. And then that affected me elsewhere because it was just added frustration. I was thinking about my profit loss. I was now only up about $15,000 for the month. And we were a lot closer to the end of the month than we had been a week before when I was up 21,000. So I could tell that it wasn't going to be the month that I wanted it to be. And here I was in another trade that I really should have already taken off for a loss, but I didn't want to. So the market closes on the 22nd. I have this stubborn loser that I'm holding in PTX. I've logged a realized red day. I think I lost 1,600 realized on the 22nd or so. And this is what sets the stage for my biggest loser of the month, CPXX. That ticker gave me fits, I guess. But CPXX, I think I had taken a realized loss on that earlier in the day. I had tried to buy a breakout on it, and the breakout, it looked like it failed. So failed breakout, kind of a bearish sign. And then there was news of an offering after hours, and it had this big drop down to 850 and then bounced. And I said, okay, we've got the failed breakout plus offering news, so I'm going to short into this bounce. And I just sized in way too large immediately on CPXX. That was the first big mistake. I shorted at 950 and I shorted 5,000 shares. And given the fact that I was thinking wider risk, big picture on this, I wanted to play off a 1050-ish. That was pretty much the high up until that point where the breakout had failed. So I was putting $1 a share of risk on a stock that I was in 5,000 shares of. So that's already $5,000 risk. That's way too much. I shouldn't be playing a $5,000 risk position when my allowed risk is only supposed to be $2,000. So it was completely out of frustration. It was, I want to make something happen. I want to salvage this month. I want to get that big winner. And I just picked the wrong stock to do it on because unfortunately the next morning they announced the pricing of the offering and it was better than expected. And CPXX, instead of fading back off like I expected, it gapped up. It gapped up big and it gapped past that 1050 area. Because I was in too much size already, because I had that $5,000 risk if I stopped out at 1050, that made me not want to take it off. I didn't want to put a $5,000 dent in my already failing month. Meanwhile, PTX was gapping up also. It looked like that was going to squeeze me pretty bad. So this was just kind of the perfect storm of stupid. And I wound up going for rides on both CPXX and PTX. And I'd look at one going against me not doing well, and it would make me not want to cover the other, and vice versa. So both of these I went on huge rides. PTX, I was down over 10,000 unrealized at one point. CPXX, I eventually wound up stopping out up in the 11s. I took it off into a dip in the high 11s because I just couldn't risk it any further. I had 5,000 shares. This thing was flying against me. I wasn't about to let it turn into a $20,000 loss or worse. So I stopped out eventually, which, I guess it's good that I took it off for the loss at some point. But it wound up being over an $11,000 loss, which is by far my worst loss on a single trade of the year, and just due entirely to stubbornness. PTX, I wound up sticking to my plan. I just said, screw it, I'm holding through this. So while unrealized, things got really ugly. I'm very fortunate that I didn't actually have to realize the loss on it. And that's why I don't have a loss down for it yet. I actually am still holding it in a back account. It's down in the 105 area now, so I'm pretty sure that I'm going to be out of this within a couple days of filming this video. It's been churning down here for days now, and it won't quite break down any further. So I think I'm just going to take it off for a couple of cents a share loss, and that'll be that with it. But it still is going to be a loss that was stubborn and that I went on way too much of a ride with. But thank goodness I didn't have to stop out of PTX up near its highs, because that would have just destroyed my month had I had to get out of that one too. I played with fire and I kind of got lucky on this one, but CPXX, it did burn me, and I did have to learn a little bit of an expensive lesson on that. So anyway, after all these mistakes, after taking off CPXX, I knew that just mentally I was done. I think after the CPXX loss was realized, I was up only a few $1,000s realized for the month at that point. And I said, I need to step away, I need a break. So I threw myself into vacation mode. The plan was not to trade at all until I got back from Iceland. But then I saw some really nice setups forming the last week of the month. So I had to come back for those. I mean, if I see the opportunity there and I feel like I've got a clear enough head, I am going to try. TRTC, I had a great short on that. That was a nice little overextended one that snapped for me. And then RJetQ also. A couple OTCs kind of saved the day for me and saved my month. But despite things kind of working themselves out to a degree at the end of the month, it still was just Not smart trading, not good trading. And the underlying takeaway here is that I need to get back to using hard stop losses until I mentally get myself back to the point where I'm trading based off of setups and not off of profit loss. I need to take it out of my hands again until I can start proving to myself that I can handle it. So for April, here's a couple changes I'm going to make. First of all, like I said, back to hard stop losses. Have to do it until I can prove to myself I don't need to. But to try to get away from that money mentality a little bit, I think this little calendar I've been keeping here, it's not doing me any favors. I'm updating it every night. It's constantly in my mind. It's constantly in my face. And I don't like trading like that. I don't like trading just thinking about the money. So I'm going to get back to uploading my trades on a weekly basis. And I'm just going to fill out this calendar at the end of the week. So instead of doing it day to day, I'm going to try to make it more of a weekly thing, try to take a step back from it a little bit. And I'm going to see if that helps me in my trading at all. And that way maybe I won't focus so much on one red day or so much on trying to get revenge for a loss the day before. Because March was so sloppy, I did not earn the right to trade more size in April. I'm staying put at $2,000 risk. I'd love to increase size, but you know what? I have to earn that right. I certainly did not earn it this month. So for the month of April, risk stays at 2,000. I'm going to try to focus a bit less on the money, update the calendar, weekly instead of daily. And I'm going to get back to using some hard stops. I'm going to force myself out when the trade isn't working against me. And hopefully that gets some of the sloppiness under control and I have much better things to report to you at the end of the month in April. So although it was a disappointing month, I escaped green. I'm very fortunate to have escaped as green as I did. And I'm going to get to work on making April a better month. Thanks to all you guys for watching, and I hope you all had a great first quarter of the year.
My name is Tim Sykes, and I teach people to trade stocks. I am a self-made multimillionaire.
So this is the ideal trade that I'm going to talk about. I want you guys to understand every single aspect of this trade.